We believe the next step going forward will be the tokenization of financial assets. And that means every stock, every bond. I believe the next generation for markets, the next generation for securities will be tokenization of securities.
Larry Fink runs BlackRock, managing $10 trillion. And he just said he wants to tokenize everything. Stocks, bonds, real estate, it's all going on-chain, and it's already started. In this video, you'll see exactly how BlackRock is already leading this charge with their blockchain fund, BUIDL, which tokenizes ultra-safe US Treasuries. Next, we'll dive into Centrifuge, a top DeFi project connecting real-world businesses to crypto liquidity. And finally, we'll cover Ondo Finance, whose native token is already available on Coinbase, allowing anyone to indirectly invest in tokenized treasuries and bonds right now. Stick around until the end, because tokenizing real-world assets isn't the future. It's happening today. BlackRock isn't just talking tokenization, they're doing it right now with a groundbreaking fund called BUIDL. Think of BUIDL as your classic money market fund, but on steroids and completely on-chain. Here's Carlos Domingo, CEO of BlackRock's tokenization partner, explaining where it all begins.
Well, if you think about where the market fit for tokenization has been, I think the first asset class that was successfully tokenized was the dollar, right? So stable coins, which are essentially tokenized dollars, it's at 150 billion plus size. So I think that the next, more natural asset class to do that was the closest thing to a dollar, which is treasuries, right? So money market funds are basically short-term treasuries and repurchase agreements, which is what the BUIDL fund is. And I think the reason this has been successful, obviously, one of them is because it's BlackRock. So it's issued by the largest asset manager and the most reputable in the world. But I think the other part is that it's really a full on-chain, tokenized money market fund where the tokens are issued on the public Ethereum blockchain. They're transferable peer-to-peer across whitelisted institutions. They have instant redemption through selling it through Circle using USDC. So it has a lot of features that make it not just like a tokenized money market fund, but something very useful for the crypto economy.
Launched on Ethereum in March of last year, BUIDL puts every dollar into ultra-safe assets like US Treasury bills, cash, and repurchase agreements, and it's been explosive. In under a year, BUIDL's market cap soared past $800 million, becoming one of crypto's biggest tokenized treasury products. Unlike traditional money market funds stuck in 9 to 5 trading hours, investors can buy, sell, and earn yields from BUIDL tokens 24/7, right from their wallets.
So blockchain, if you think about it, is just basically like this very, very good public, cryptographically secure distributed ledger that allows you to represent securities alongside with cash and move them in a very, very efficient way. And that unlocks a lot of utility for securities and a lot of accessibility, instant settlement, eliminates reconciliation problems, manual processes, etc. So that's what tokenization is essentially.
BlackRock teamed up with crypto infrastructure giant Securitize for this, whose CEO we just heard from. They're now expanding BUIDL beyond Ethereum onto chains like Solana, making it easier for anyone, anywhere, to access tokenized treasuries. Some crypto purists question its centralized, permission nature, but with rapid growth and serious money behind it, BUIDL proves Larry Fink's vision isn't just hype. BUIDL is currently available through the Securitize platform for accredited investors, but that might not be the case for long. Listen to Fink call on the SEC to fast-track tokenization.
As a huge believer of crypto and blockchain and tokenization, I want the SEC to rapidly approve the tokenization of bonds and stocks. That will simplify things, make things easier.
With plans to expand across multiple blockchains, BUIDL is just the beginning. But it's not the only player changing the game. Centrifuge is bridging the gap between DeFi and real-world finance, and it's already making waves. Imagine taking real-world things like unpaid invoices, real estate loans, or business receivables, tokenizing them into NFTs, and then turning those into investable, tradable digital assets. Here's the co-founder of Centrifuge explaining the NFT aspect.
Use NFTs to track information about the individual loan, like a single mortgage or a single invoice, and bring those on-chain to have the transparency and insight into what's happening with these assets as you're investing in a pool of loans.
Centrifuge connects businesses to decentralized finance, allowing them to get funding without traditional banking hurdles. Centrifuge made headlines partnering with MakerDAO, the team behind the DAI stablecoin, to launch the first-ever RWA-backed loans in DeFi history. In a blockbuster $220 million deal with BlockTower Capital, Maker provided $150 million of capital to fund real-world loans directly through Centrifuge's platform.
Then we're the first to actually use real-world assets as collateral for Maker stablecoin. And now we're some of the first to bring really an institutional-grade offering into DeFi.
This deal didn't just prove that DeFi can directly fund real economic growth. It showed that stablecoins like DAI could be backed by income-generating, off-chain assets. What makes Centrifuge unique is its versatility. It runs on its own Polkadot parachain and seamlessly connects to Ethereum's massive liquidity pools. But it's not without skeptics. Critics argue that Centrifuge's approach relies heavily on traditional, off-chain legal structures, and investors often must be accredited, reducing decentralization. Still, the success speaks volumes. Centrifuge has clearly shown the world that DeFi isn't just for crypto-native assets. It's ready to fund real-world businesses, making finance truly open and borderless. CFG tokens are available on exchanges like Kraken and KuCoin. Users interested in investing directly in RWA pools can explore Centrifuge's dApp or platforms like MakerDAO's Oasis app, keeping in mind some pools require accredited investor status. And the innovation doesn't stop there. Ondo Finance is another heavyweight in RWA tokenization, targeting traditional debt markets and making it simple for crypto investors to tap into the yields of assets like US Treasury bills and corporate bonds. In early 2023, Ondo launched groundbreaking tokenized funds that allow stablecoin holders direct investment into short-term US Treasuries and corporate bonds. Tokens like OUSG, Ondo Short-Term U.S. Government Bond Fund, backed by BlackRock's Treasury ETF, deliver yields of around 4 to 5% APY from the underlying bond holdings. The response was huge. Ondo quickly attracted nearly $1 billion in assets as investors rushed toward these safe, on-chain yield options, especially during periods of crypto market volatility. Here's Ondo's founder and BlackRock's CIO of ETFs, Samara Cohen, on why tokenized treasuries are a game-changer for on-chain investors.
As investors started to think about how they might allocate to Bitcoin in the context of their overall portfolio, they wanted a mechanism to view whole portfolio risk, and this living in two ecosystems. First of all, it's very hard to go back and forth unless you're living your life on chain. And second of all, it's hard to kind of look at holistic risk management. So that was kind of the bridge where we actually took a crypto asset and brought it, into a TradFi wrapper and moved forward that way. Now, to your question on, the trajectory of tokenization, and you spoke to this incredibly well in your keynote. I think there are lots of parts of markets that work well. Collateral and the cash kind of ecosystem, particularly in this, era of rising rates and increased capital requirements for banks, that part of the ecosystem needs to be able to move with more agility and less friction. So tokenizing cash and collateral-like assets has a huge potentially systemic benefit that kind of goes the other way. You're taking a TradFi asset, or in the case of a treasury fund, sophisticated treasury management capabilities, and actually moving that on chain.
With a team filled with former Goldman Sachs veterans, Ondo is serious about bridging traditional finance and crypto. In 2025, they expanded even further by launching the Ondo chain and a regulated trading platform for tokenized stocks and bonds, demonstrating a massive commitment to tokenizing the $90 trillion global equities and bond markets. Critics highlight that Ondo's securities tokens still require investors to be accredited, as the tokens represent securities, which limits broader access and depends on trusted custodians, raising concerns about centralization. Despite these points, Ondo's rapid growth is undeniable proof that on-chain markets can directly access real-world yields and are pushing both regulators and institutions to pay close attention. The Ondo token is available for purchase on Coinbase, and tokenized treasury products like OUSG are accessible on Ondo's platform for accredited investors. And it's not just traditional asset managers like BlackRock or innovative startups like Ondo pushing this vision. Even Robinhood, the popular trading platform and public company, is entering the asset tokenization space. The CEO recently made headlines by revealing ambitious plans to tokenize private company stocks, bringing liquidity and accessibility via crypto rails to traditionally illiquid markets.
Speaking of private assets, a lot of things that are trying to be done in the private assets world is tokenization of private funds. You've been talking about tokenization as well. You told investors just last night that it's something that you're perhaps most excited about. How big of a business could that become for you? And what are the near-term plans to make tokenization a serious part of what Robinhood does?
Yeah, so I think the near-term opportunity that everyone's excited about in the U.S., provided we get some regulatory clarity on this point, is being able to put real-world assets on blockchains. And I think what resonates with customers in the U.S. is private company stock. So I think it's ludicrous that, customers are free, retail's free to invest in, a wide collection of meme coins and other alternative assets, but OpenAI and SpaceX and other private companies that early backers have seen, 100x, sometimes 1000x or more returns are impermissible and are seen as too risky. So I think that needs to change. And I think over time, what you'll see is if we release the power of crypto technology and allow crypto to be connected to real world assets like securities, the addressable market for that is every private and public listed equity, which is obviously trillions of dollars in market value. We see crypto as the next stage in the technological advancement. We've gone from, filing cabinet to mainframe to on-premise to cloud. And I think the next stage of evolution is going to be the financial infrastructure going from cloud to crypto technology. I think Robinhood's best positioned to actually lead that transformation.
This shows the extent to which tokenization is rapidly gaining mainstream momentum and attention. Larry Fink's bold vision of tokenizing every financial asset isn't speculation. It's becoming reality. With giants like BlackRock, innovative DeFi platforms like Centrifuge, and market leaders like Ondo Finance already making huge moves, asset tokenization isn't just the future, it's the present. The shift is underway, and the opportunities are massive. Tokenization will soon reshape finance as we know it, opening up a truly global, transparent, and frictionless financial market for everyone. As always, this isn't financial advice, just sharing info. Always do your own research. If you enjoyed it, please subscribe and we will see you in the next one.